Hello everyone, I hope we're all having a great day today. So in today's video I wanted to go over this quote from Stifel saying the stock market is in a mania that will push it higher before a potential 26% drop in 2025. Stifel says, the S&P 500 could lose a quarter of its value next year according to Stifel. The benchmark index looks like it's caught in a mania, the firm's strategist said in a note. So, this is TradeThatSwing.com, all credit to them. This is a chart of all the 25% declines or greater in the stock market over its entire lifespan. So expect a 25% decline or more in the S&P 500 every 5 to 15 years. Now let's take a look at the chart. As we see here, there's been a lot of greater than 25% declines. If we're expected to see every 5 to 15 years, the 25% drop could be accurate. In reference to what Stifel says, it could be accurate. Now let's take a look at this quote by Warren Buffett. The stock market is designed to transfer money from the active to the patient. And also the old adage, it's not about timing the market, but about time in the market. This has proven true over the years. Research shows that those who stay invested over the long run in a well-diversified portfolio will generally do better than those who try to profit from turning points in the market. So I would suggest to get ready for this 25% drop that may or may not happen. I would suggest a dollar cost average strategy. So dollar cost averaging is the practice of putting a fixed amount of money into an investment on a regular basis, typically monthly or even bi-weekly. You could even do it daily. Now I'm going to show you two ETFs and an index fund that when combined create a powerful portfolio, and they have diversification across sectors as well as diversification between growth and value stocks. So continue watching to see these three picks. So I would suggest a strategy of investing in SCHD, Schwab's US Dividend Equity ETF, because it has shown a 235% increase since October 2011. Its dividend payout as of September 30th, 2024 is 3.46%, so that's really good. It's a high yield dividend equity ETF, so it's a straightforward low cost fund offering potential tax efficiency. The fund can serve as part of core or complement in a diversified portfolio, tracks an index focused on the quality and sustainability of dividends, invests in stocks selected for fundamental strength relative to their peers based on financial ratios. SCHD's portfolio consists of Cisco Systems Inc. 4.3%, Home Depot Inc. 4.3%, BlackRock Inc. 4.3%, Bristol Myers Squibb 4%, Lockheed Martin 4%, Chevron 4%, Verizon 4%, Pfizer almost 4%, United Parcel Service Inc. 3.7%, and PepsiCo Inc. 3.7%. Now they have a lot more holdings than this. This is just their top 10 holdings, but as you can see here, it's a lot of those value stocks providing good dividends. So this is a good dividend stock to invest in. Next up, we have SWPPX, which is Schwab's S&P 500 Index Fund. Since 1997, it's up almost 600%. And the Schwab S&P 500 Index Fund their goal is to track the total return of the S&P 500 index. It's a straightforward low-cost fund with no investment minimum. The fund can serve as part of the core of a diversified portfolio. It's simple access to 500 leading U.S. companies and captures approximately 80% coverage of available U.S. market capitalization, invests in some of the most well-known U.S.-based companies. So let's take a look at their portfolio, see what they're invested in. They have 7% Apple, 6% Microsoft, 6% Nvidia, 3.5% Amazon, 2.5% Meta, 2% Alphabet, which is Google, almost 2% Berkshire Hathaway, 1.6% Google again, 1.6% Broadcom, and 1.48% Tesla. So this is it tracks the S&P 500, so it's giving you some of those juicy growth stocks that are leading the S&P 500. And finally, SCHG. This is up 742% since December 2009. And SCHG, the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones U.S. Large Cap Growth Total Stock Market Index. It's a straightforward, low-cost fund offering potential tax efficiency. The fund can serve as part of the core of a diversified portfolio, such as all three of these can. Simple access to large cap U.S. equities that exhibit growth style characteristics. Stocks are classified as growth based on a number of factors. So their portfolio also holds Apple, Nvidia, and Microsoft, but a larger portion of their portfolio is dedicated to it, as it's not tracking the S&P 500, but large cap US equities. So Apple 12.5%, Nvidia 12%, Microsoft 11%, Amazon 6%, Meta 4.4%, Alphabet 3.3%, Broadcom 3%, Alphabet 2.7%, Eli Lilly 2.5%, Tesla 2%. So as you can see, it's almost the same. However, the if you were to view all holdings, they would differ in that aspect. And so what I would suggest to you going into this scary time in the market where a 25% dip is looming over our heads, I would suggest SCHD, SWPPX, and SCHG as part of a trifecta of a portfolio, something where you're investing, around 33% into each of these, or if you're more risky, maybe a larger percentage in SCHG and lower into SCHD, or the opposite, if you're more risk averse, more into SCHD and less into SCHG. So I would suggest a dollar cost average strategy. That way you're not trying to time the market, but you're trying to have time in the market. So maybe your fixed amount is $100, maybe it's $500 or even $1,000. So let's say you have around $500 a month to invest in your portfolio. You could split that $500 divided by around 20 trading days each month, which leaves you $25, and then 25 divided by 3 going to leave you with $8.33 to put into the 3 stocks that I suggest, or 3 stocks that you find with your own due diligence, because I'm not a financial advisor. This is not financial advice. Always do your own due diligence and find what stocks you want to invest $8.33 into each day. Maybe you find three stocks you like better than what I brought up today. So thank you very much for watching. If you made it this far, please leave a like and subscribe, as it keeps me super motivated. A like is great, and a subscription keeps me super extra motivated, and it's free. So thank you very much for making it this far. Thank you for watching. I hope you enjoyed the video. It was all for entertainment and educational purposes only. So yeah, thank you for watching. I hope you all have a great day.